We had a significant news event this morning that caused the dollar to spike. US PPI numbers came out this morning and they were better than expected, with the PPI percentage at 0.3% and core CPI coming out at 0.4%. Let's recap the news that we had this week, starting off on Monday, where Australian interest rates were raised to the expected 25 basis points up to 3.1%. More Australian news came out on Tuesday when GDP numbers came out worse than expected at 0.6%. Wednesday had more interest rate news when Canada raised interest rates the expected 50 basis points up to 4.25%. Lastly, Thursday, U.S. unemployment claims came out higher than expected at 230,000. That's the news, and we'll see you next week. So here we are in the Edge Finder. We're going to take a look at the market heat map first. Well, actually, what I want to take a look at first is actually the dollar chart. So like I mentioned, we had our PPI news event this morning, came out better than expected. So here on the DXY 15-minute chart, we can see that news event right here. Nice, strong, big green candle for the news event. Really bullish looking for the dollar. Has pulled back a little bit since then, but overall a solid start this morning for the dollar. Back into the Edge Finder, taking a look at the market heat map. Here we're going to look at our major currency pairs first, our US dollar pairs, and they're looking a little bit split. USD CAD is our biggest mover to the upside so far today, coming in at 0.47% higher, or it's up 0.47% so far on the day, whereas Euro USD is down 0.3% so far on the day. Indices are looking not great. US indices are down on the day so far. JP225 is up 1.18% so far today. Euro pairs are performing pretty poorly. All of our Euro pairs down except for Euro CAD, which is only up 0.14%. Are you trying to find a broker or feel like you need a better one? In the description below, you'll find the link to fill out our broker match form. After answering a few easy questions, our team will reach back out to you with a personalized broker recommendation. Try it for free in the description below. Euro GBP down 0.5% so far on the day. Pound pairs, on the other hand, they're doing all right, except for that Euro pound pair, which we just said was down 0.51%. But the rest of our pound pairs are doing all right. Yen pairs are up for the most part on the day. Swiss franc pairs are kind of split. CAD CHF down 0.55%. Swiss JPY up 0.37%, however. Australian dollar pairs, again, looking kind of split. Aussie CAD up 0.4%, Euro Aussie down 0.2%, and lastly, NZD pairs, not a whole lot of movement here for the NZD. Euro NZD down 0.45%. NZD CAD is actually up 0.72%, so our biggest mover to the downside has moved somewhat significantly. NZD CAD has moved up pretty significantly, up almost 1 whole percentage. But the rest of these pairs, not a whole lot of movement going on here. So that was a quick look at what our pairs are doing so far today. If we're heading into the watch list, again, I'm going to take a look at our currency pairs only. Let's get rid of these neutrals so that we're left with our buy and sell signals. Same strong sell signals down here, Euro NZD, Aussie NZD, GBP NZD, getting pretty used to those. Aussie CHF and CAD CHF are both coming in as sells. And we have a lot of buys so far today. No strong buys, but a lot of solid buy scores at +5. NZD pairs, of course, can't escape them. And USD CAD, which was a strong buy a couple days ago, has dropped since then. CHF JPY and Euro JPY also coming in as buys. We did just have a US news event, and it is Friday. Today's Friday, December 9th, and on Friday, our COT data gets updated. So I would be interested to see what institutional traders are thinking about the dollar. So I'm thinking NZD USD is going to be the pair we're going to take a look at today. A solid buy score of a +5, and our COT data is coming in at a score of -1. Retail sentiment coming in at a score of +1. So we'll take a look at those numbers right over here. So updated COT numbers again today. US dollar coming in at 75.06% long and 24.94% short. New Zealand dollar 44.09% long and 55.91% short. So institutional traders fairly heavily favored long on the dollar. Pretty split on the New Zealand dollar. Pretty almost 50-50 here for the New Zealand dollar. Definitely favored long for the US dollar. Retail sentiment, on the other hand, 78% short, 22% long. So retail traders shorting this pair as a whole. Seasonality coming out to a score of +1. We can see, historically speaking, in the month of December that this pair does tend to trend upwards throughout the month and finish out the month better than it came in at, which so far is lining up with our current year average. And if we take a look at the month of November, that was the case there as well. I love when the seasonality lines up, when our last 10-year average and last 5-year average are lining up with the current year average, because I just find it so interesting to see how some of these markets repeat themselves. I mean, for example, if you want to take a look, pretty much ever since August, we can see that August, last 10-year, last 5-year, historically performed worse. That was the case this year as well. Same with September, historically has performed worse. That was the case as well. October, same thing. Closer to that neutral line, but maybe just slightly below that line, and that was the case this year again. And then moving into November and December, we see that it kind of trends upwards ever since September. Kind of does a little bit better, and now we're above that neutral line, meaning that we're in the positive. We're in the positive, doing better, and that was the case this year as well. So that's why I find seasonality so interesting. Trend reading is a score of +2. We'll take a look at our daily chart right up here. We can see some solid upward momentum, a little bit of retesting perhaps, and then breaking back through, creating new highs, dipping back down a little bit, but our price forecast predicts that it will continue an upward trend, hopefully creating some more new highs on the long side. Lastly, we have our fundamental section. GDP growth comes in at a score of -1, where inflation, unemployment, and interest rates are all coming in at scores of +1. We can see that our fundamental numbers right here, US dollar GDP growth 2.9% compared to 1.7%. That's the only area where the US is beating out the New Zealand dollar. The rest of these categories is looking more bullish for the New Zealand dollar. Unemployment in the US 3.7% compared to New Zealand's 3.3%. US inflation 7.7% compared to New Zealand's 7.2%. And lastly, US interest rates 4% compared to New Zealand's 4.25% interest rates. All right, so that was a quick look inside of the Edge Finder. I'm going to go back to the watch list one last time, just in case you'd like to pause the video and take a look at this. See that here are all of our assets that we currently have buy or sell signals for, their score, and the score metric here, so that you can see kind of why it's getting this score, who is beating out who in what area, how it's trending, how it's performing seasonality wise, just so that you guys, if you want to take a look at that, feel free to pause the video, get an updated look at that. Reminder, if you want the Edge Finder for yourself, you can find that down in the links in the description below.
And gold, by the way, you guys, gold is in fact flying here this morning. Here's an hourly view of the gold market, giving back some gains here during the PPI news announcement and then rocketing back. Gold looking pretty resilient here this morning. And when we look at gold, let's do a little top-down analysis on gold. Probably a good way to start out the stream for my gold trading friends. We're looking healthy here. I think gold, momentum-wise, looks really, really quite good. And you do your top-down analysis kind of thing. Yes, you are tagging resistance, and this is going to be the first criticism of the bears are going to say, Nick, don't you touch that thing on the long side. It is going to come down after it rejects off this resistance at 1800. And to their credit, we've really struggled to get past that 1800 mark for the bulls. Longer term, though, let's talk about some things on why I'm more bullish than I am bearish on gold right now. Big key thing here for you. Bear with me as I pull up my pen so I can draw pretty pictures for you guys. Okay, so we broke out big time on the daily chart. Like this downtrend, this indestructible, never-ending downtrend on gold, it ended. Funny how that works. Markets seem so unbelievably, biased. Like this was so bearish, and then now we very quickly have pivoted, shown some signs of bullishness here. And my view is looking for those long side setups. Some of you guys, might remember what we discussed yesterday for gold. We discussed a couple things. So we looked at our daily chart, and yes, you have daily chart resistance. But one thing I want you guys to notice is when we zoom in here a little bit, we've actually also seen, here's a low, right? We shot up, nice run to the upside, pulled back, higher low, shot again, tagged resistance, and rejected. But here come the bulls, resilient enough to put in another higher low, and now flirting with the idea of breaking through the highs. If we can break through the highs, I think gold has plenty of room to expand higher, right? And the idea, the thought process here for that is, how do you catch that move? Well, if you were with us yesterday, then we talked about the move that already happened. Of course, I don't like to speak in hindsight, so I will give you some forward thinking ideas. I don't know if you guys notice this, but so many creators, they'll only ever speak in hindsight. They'll say, oh, I took this trade over here and I closed it out here. And it's like, well, what's your next idea? Because, as traders, just like being a salesman, you're only as good as your next sale, right? As a trader, you're only as good as your next trade. If you're always just looking in hindsight and talking about how great you did yesterday, how are you going to make money tomorrow or today? So for me, my next trade idea, I am currently long on gold, by the way. I have a position open and no cap streams. We should call that. That should be the nickname of these streams. I'll show you guys my gold trade. Going to GLD. Let me log in. We're up 230 bucks. I mean, it's not like it's a lot, but it's something. We are long gold and still doing quite well with it. As we try and flirt past this high, this is what I'm looking for in terms of continuation plays. Can we get the break? And if so, if we close outside of that, solid chance I'd be willing to add to a gold position on the retest. Okay. So what does that look like? Well, let's get more specific. Let's get more specific with it. No cap Nick. You know why they would also call me that? Because I always look so stupid with a baseball cap on. I've always wanted to be able to do like the backwards hat look. Can't pull it off. So that's why they call me No Cap Nick. I'm kidding, but that is actually kind of facts about me. I wish it was not the case. But what I'd like to talk about here with gold is this idea of like, okay, well, if you caught the move, great. If you're waiting for the move, or you're waiting for the next idea, for me, the next idea is just go with the flow here, moving up, wait for that break, retest, and then I'm looking for more, right? Stops in this case probably go in the middle of this consolidation zone. And you might be able to tighten it up a little bit more on like the hourly, right? If I look at the hourly chart, this is where you come in on this is why we do multiple time frame analysis, right? Because now what we could do is like, let's say we get the break and we get the retest on this trade, right? We get a big, strong push outside of resistance and say, okay, where's that retest? That retest comes in. Now what? Now what is the question? What are you going to do with this once you decide, okay, like let's say you take a buy trade. Well, this is where using multiple time frame, I can identify, okay, we had several higher lows intraday on this hourly chart. I probably want to jump out of that trade and I can tighten up my stop loss. What we just did here, you guys, is we just tightened our risk to reward idea on this trade tremendously. We just sliced off a lot of extra fat that we didn't need on the stop loss, right? So that's my thought process, is waiting here, pending. Can we break? Can we retest? If so, it's a trade idea. I like that.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.